12 marks, they are giving internal choices. Okay. Just 1 minute, ma. I'm sending the PPT in chat box. Just download that that PPT to for your reference. Okay. I'm sending now. Everyone, did you receive PPTs? PPT? Shabina, can you tell me please, ma? Did you receive that PPT in chat box?
Yes, sir.
Okay, ma. Just download that PPT file for your reference. Just entire PPT contains up to after the fourth chapter. Just I'm opening this PPT. Okay. Okay, ma. This PPT is visible to you?
Yes, sir.
Oh, okay, ma. So just download that PPT and for your reference purpose, entire information is contained. What exactly important one? Each important points I mentioned in this particular PPT. Just to go through with that PPT, and before 1 to 3rd chapter, I have another 1 to 3rd unit. I have another PPT. I will share. After 10 to 15 minutes, I will share that PPT also. So coming to this question paper pattern. So in this particular question paper pattern, we have two sections. That is section A, section B. In section A, 10 mark. they are giving 10 questions. In that particular 10 questions, we will write only 5 questions. We have choices. Then section B, these are all the long term question, long answer questions. In this particular long answer questions, we have internal choice. Okay, in each block they will ask for long in for short questions they will ask some main important terminology or main important questions only they will ask in particular short answer questions. Coming to the first, we first we discuss the long answer questions, then after we discuss the this short answer questions. So coming to this long answer questions, we have 5 blocks. In each block uh, they are giving some they are giving units. Okay, in particular for example, just we see the block number 1. In block number 1, introduction to the business finance, they are asking they are giving 4 units in this particular introduction chapter. So in this particular 4 units, any 2 questions they will ask. Okay, just see some important questions regarding to this particular introduction to the business finance. First you first everyone must know the each particular unit definition. But we have 15 units, right? In particular, in 15 units, each unit definition is compulsorily you learn and you write. If you learn this particular definition, if if you don't know any question in particular particular in particular short answer or long answer questions, you can start with this particular definition. That evaluator, they understand, he knows some basics about that particular topic, so they can give some marks in particular answer. Okay, so just everyone must be learn each particular unit what definition. Okay, in coming to this first unit, they will ask around, they will ask the so page number 2, in page number 2, they are giving that types of finance, that is personal finance, public finance, and business finance. This regarding this is the main important question in particular unit 1. Okay, in unit 1 they will ask types of the finance. First you learn these types of finance, then after you study the other questions. Before that you know about the definition of particular business finance. In page number 2 only they are given so many definitions, so many uh, definitions they are given. Any one definition you must be learn, and also you know the types of finance. You start with that particular definition, business finance definition, then after you start the you write the types of finance, like, okay, this is in particular unit 1, types of finance question is very important. Then after you study the sources of business finance, short, that is on the basis of time period and on the basis of origin. So this is also important question. Just go through that question also in unit 1. And in unit 2, that is finance function. So in finance function, in page number 18, just you see that functions of the finance. So here we have 3 functions. In any financial manager, they perform 3 functions, that is investment decisions, financing decisions, and dividend decisions. So in page number 18, you find that uh, uh, functions of the finance. So First, you learn this functions of the finance. Then after, you study the objectives of financial management. This is also very important question. They will ask short-term question, short answer questions, or they will ask long-term questions. So in this particular unit two, uh, two are the important questions. One is functions of the finance. Then after, objectives of the financial management. So that is profit maximization and wealth maximization. So these two questions are very important. Coming to the unit number three, the unit number three is financial planning. In financial planning, you first study the definition of the particular financial planning. So here they will ask steps in financial planning. How many steps they have in particular financial planning? So you learn this in page number 36, this steps in financial planning. So this is very important question. Thereafter, you study the pro forma of the cash, but just see the pro forma of the cash budget, pro forma of the income statement, performance balance sheet, pro forma of balance sheet, and capital expenditure budget. Just you see that particular what is the pro forma they are given in particular book. Just you go through with that particular pro formas. Okay, so but you must be learn this particular unit steps in financial planning. So that is establishment of objectives, formulation of policies, forecasting items to be included in the financial plan, formulation of the procedures, rules, and regulations. Okay, and also in coming to the unit number 4, that is capitalization. In this particular capitalization, you just first learn the what is the capitalization. Any definition in page number 48, they are given some definitions. So in this particular definitions, you study any one definition, and also this particular types of capitalization, that is over capitalization, under capitalization, this thing only, types of capitalization, over capitalization, under capitalization, and optimization, optimum capitalization. So you study this particular uh, question. See, this is very important question. They will ask short answer and also long question. Okay, these are all the comes under black number 1. In this particular black number 1, just we I given only 5-6 questions only. That is first functions of the finance. First one is types of finance and functions of the finance, and profit maximization and types profit maximization and wealth maximization. Then after, functions of the finance, objectives of the financial management, and in particular financial planning, steps in the financial planning. Then after, the pro forma of particular different uh, tools of financial planning. Then after, capitalization. In capitalization, types of capitalization. Okay, these are all the very important questions in black number 1. So coming to the black number 2, that is unit number 5, that is capital markets. In capital markets, just you start with definition, then after you start with definition, then after you see this overview of the capital markets. In particular overview of capital markets, that is, they are divided into organized market and unorganized market. In organized market, they subdivided into capital markets and money markets. In capital markets, they divided into primary market and secondary market. So this is the financial system. In this particular financial system, they are divided into four groups. Likewise, in page number 64, they mention one table, one hierarchy. In particular hierarchy, you just go through with that particular hierarchy and you learn the particular capital markets definition. What is the capital market definition and what is the money market definition? Then after the functions of the primary market, they will definitely they are asked about the what is the primary market and functions of the primary market. In the particular primary market, what is the main functions in particular primary market? They will ask about the functions are futures of the primary market. Okay. And this is also very important question, that is methods of floating new issue. So in how many ways any public company they issue the shares and how they are raise the money. So this is the methods to new issue, that is public issue, right issue, bonus issue, and private placements. So this is also very important question. And just then after, in book building method of public issue. So every time they are asking this question. Okay, this is a very important question. That is what is the book building? And first you know the which committee is recommended this book building method, and first you write with the definition of this particular book binding method. Then after, the process of the book binding. So in page number 68, they are given some points regarding to this particular book binding process. Okay, this is very important question in particular page, unit number 5. So in for a particular short questions, in page number 71, important concepts in the primary market. In particular important concept, they are given some definitions, they are given some terminology, that is ASBA, that is application supplied by the block amount, and also green shoe option, anchor investor, okay, IPO grading, and reverse book building. So this is also very important terminology, and they will ask some they given they are asked for short short term questions. Okay, short questions. And SEBI guidelines also, just to go through that particular SEBI guidelines. So sometimes they will ask about the difference between the book building issue and the fixed price issue. So this is the process of the book building process. So these are all the terms used in offer document. So they will ask each one as each term as short question. So coming to the unit number 6, that is money market. Okay, in page number 81, they given some definitions regarding to the money market and the functions of the money market. So every time they will ask about the difference between the money market and capital market. This question is very important. And also this hierarchy also they will ask. So this is the structure of the Indian market, Indian money market structure. Okay. This particular money market instruments, we have five instruments. So each instrument is very important. So you just learn about the each particular what is that each particular instrument, that is what is the treasury bill, what is the call money market, and also commercial paper, commercial bill. So just you study the each particular instrument. So this is the only important questions in particular unit number 6. Coming to the unit number 7. So in particular unit number 7, they are asked factors infecting flow of foreign capital. Which factors are more uh, affect the flow of foreign capital? That is expected rate of interest and marginal efficiency, political stability, government policy, economic climate, exchange rate of stability, business conditions, credit rating of the country, innovative financial products. So in page number 101, they given this particular factors, which factors is affecting the flow of foreign capital. So just go through with that particular thing, and also they will ask about the what is the foreign direct investments and foreign portfolio investments, difference between particular FDIs and FPIs. Okay, just go through with that particular FDIs definition and FPIs definitions. Then after just about the ADRs, American Deposit Receipts, and Global Depository Receipts, and also Indian Depository Receipts. Just you study that particular what is the ADRs, what is the GDRs, and what is the IDRs. Okay, this is the main important questions in particular uh, unit number 7. Coming to the block number 3. So in particular you don't want to study in each particular, just they given some choices. So in particular block number 3, they given 3 units. In particular 3 units, you maybe if you want to uh, leave any unit, then you study a particular any 2 units compulsory for long term long answer questions. Okay, coming to the financing decisions, that is block number 3. In this particular block number 3, we have 2 units, that is cost of capital, capital structure. So for long question purpose, if compulsorily study each one unit is compulsorily you need to compulsory study, then after, so in particular capital, cost of capital. So first you start with the definition. What is the cost of capital definition? Then after you know about the importance of the capital, importance of the cost of capital. Then after in particular, in computation of cost of capital, we have 2 methods. That is computation of cost of specific source of finance, computation of weighted average cost of capital. In page number 125, they are given. So in particular, computation of specific source of finance. In specific source of finance, we know about the what is the cost to the preferential share capital, which formula for the redeemable preferential shares and irredeemable preferential shares. Okay, and also cost of equity. In particular, cost of equity share capital also we have 5 methods. That is dividend capitalization approach, earnings capitalization approach, dividend capitalization plus growth rate approach, a bond yield plus risk premium approach. Last one is capital asset pricing model, CAPM model. Okay, so you must know about the each particular uh, approach. Okay, for calculate the cost of equity. So we have uh, four things. We have one is cost to the debentures, and cost to the preferential shareholders, and cost to the cost of equity share capital. So in particular cost of equity share capital, five approaches we have to five approaches we have. Then using that approaches, we can calculate the how much cost we incurred for cost of equity share capital. So each uh, in particular cost of capital in specific source. In each source, we know about the cost of the redeemable and irredeemable formulas, and also uh, how they are calculating each particular uh, each particular specific source. Okay, this is the and the second method is that is marginal cost of capital. Coming to the unit number 9, in this particular unit number 9, they are given that particular capital structure. So in particular capital structure, they compulsory ask about the what is the capital structure and what is the financial structure in part, and also difference between page number 140, they given clearly what is the meaning of capital structure, appearance of the balance sheet, in balance sheet what is appeared, then after what is included in particular capital structure, and uh, also in financial structure what they are included. So they will ask compulsory about this particular difference between the capital structure and financial structure. So first you know about the what is the definition to the particular capital structure, then after you know what is in particular financial structure, what are the show in particular capital structure and financial structure. So this is very important question for a long question and also short for the purpose of short question also. Um, in page number 143, they given some what is the importance of particular capital structure, why we need to calculate this particular, why we need use this particular capital structure. So they given for the importance for the capital structure, that is value of the maximization, cost minimization, increase the share price and investment opportunities, growth of the country, utilization of availability of funds, solvency, liquidity, flexibility, and distributed control and controlling minimization of the financial risk. So this is also a very important question in particular capital structure. And also theories in particular capital structure. We have four theories, that is net income approach, net operating income approach, traditional approach, last one is approach. So first one is relevant theory and traditional approach is neutral theory. Remaining two theories are irrelevant theories. So you must be know about the which one is proposed this particular approaches, their who is proposed that particular approach. Okay, that is net income approach is propounded by Duran. Net operating income also propounded by David Duran, and a traditional approach is Solomon, and approach is only. So what they are given, and also what are the relevant theories and what are the irrelevant theories, you must be know in this particular capital structure theories. Coming to the block number 4, that is investment decisions, that is working capital and capital budgeting. So in working capital, we have two things, that is how we calculate this working capital means on the basis of value, on the basis of time. On the basis of value, how much value in gross working capital, how much value we have in net working capital. This is the value based calculation. This is on the basis of time, that is working capital. How much time that some amount is blocked in particular in work particular short term current asset and in current liabilities. So how much money we blocked and how much money we are paying. So that based on this is calculated on the basis of taking into 1 year is constant in this particular 1 year, how many days this particular amount is blocking. So on the base of time, we calculated the permanent working capital and fluctuating working capital. So these are all the current liabilities. Okay, that is cash dividend payable, accrued expenses, short-term note payable, accounts payable, tax payable, uh, unearned revenues. These are all the current liabilities. These are all the current assets, that is cash and cash equivalents, accounts receivable, prepaid expenses, raw material, inventory, short-term investments. So difference between this current asset and current liabilities we called as working capital. So just see this definition. In process which is designed to ensure that an organization operates effectively by monitoring and utilization of its current assets and current liabilities to the best effect. Primary objective is to enable a company maintain the sufficient cash flows in order to meet its day-to-day operating expenses and short-term obligations. But the why we prepare this capital working capital means for the purpose of we meet the day-to-day operating expenses and also for the purpose of short-term obligations. To fulfill the short-term obligation purpose, we maintain some cash reserves and raw material. So different ways we maintain we block the some amount for the purpose of day-to-day to meet the day-to-day expenses or day-to-day operating expenses. So in this particular, so how much we are keeping the money is it it is depending upon the organization structure. Okay. In this particular working capital, you must be know about the concepts of the working capital. That is on the basis of value. Actually, that is not a concept, on the basis of value. In page number 156. Okay. First, you know about the continuous of current assets and current liabilities. What we call as current assets, what we call as current liabilities. First, this we called as current assets, this we called as the current liabilities. So we know the difference between the current assets and current liabilities. Then after you learn about the concept of working capital. In this particular concept of working capital, they are given the so this is the on the basis of value, on the basis of time, we calculate the working capital. So for this purpose, we know about the what is the gross working capital and the net working capital. Likewise, permanent and fluctuating working capital. So each thing you must be learned for the examination purpose. Okay. In coming to the capital budgeting, in just see this page number 178. In page number 178, actually we have two uh, two groups we have. One is two methods we generally use for the calculation of the capital budgeting, that is traditional method. Second one is time adjusted method or discounted cash flow method. So in particular traditional method, we have two methods, that is payback period method, accounting rate of return method, or average rate of return. Then after for time adjusted method, we have three methods, that is net present value method, internal IRR method, last one is PI, that is profitability index method. So you must know about the each thing, that is what is the present value, what is the future value, then after what is the discounted value, then after see this particular capital budgeting evaluation techniques. In particular capital budgeting evaluation techniques, we have two things, that is traditional methods. Second one is time adjusted method. In traditional methods, we have two things, that is payback period method, accounting rate of return method. For in particular time adjusted method, we have three things, that is net present value, IRR, PI. So each thing you compulsorily know about the you compulsory study about this particular five methods for the examination point of view. Coming to the block number 5, that is dividend decisions. In particular dividend decisions, we have two theories, that is Walter's model and Garden model. So they will ask compulsory, they will ask the theories supporting to the value of the share. So how one particular equity share value is increasing or decreasing, it is depending upon the so many factors. So that particular factors, what is the main factors, and why the share value is increasing or decreasing, is discussing about particularly in two models, that is Walters model and Garden's model. For examination point of view, they will ask compulsorily the theories relating to this particular value of the share, theory supporting the value of the share, that is Walter model and Garden model. So you just study about the what is the Walters model and what is the Garden's model, what is the assumptions, and also the formulas for how the uh, market price of the share, how to calculate the market of the share also. That formula also you must be learn for examination point of view. Coming to the unit number 13, that is dividend policy. In this particular dividend policy, uh, how what is the in page number 211, they given some constraints. Okay, what constraints payment of dividend? Why which factors influence the any company to pay the dividend in particular to the shareholders? So which factors is main influencing, that is age of the company, controlling of control objectives, nature of the stockholders, stay and stable demand, legal restrictions, future financial requirements, government economic policy, taxes and liquidity. So this is the very important question in particular dividend policy, that is unit number 13, that is page number 211. And also uh, stability of dividends, that is constant dividend per share, constant dividend payout ratio, constant dividend per share plus extra dividend. This is also very important question. And also know and also study about the bonuses, what is the bonus share, what is the stock split. So this two terminologies are, these two also very important question. Important question in page number 218, they given some bifurcation, they are given some differences between the what is the bonus share and what is the stock split. So just go through that particular in page number 218. So first you study about the what is the definition to the particular bonus issue. Then after you study about the stock split. Then so coming this is the important questions in particular bonus issue and stock split. That is 14th one is retained earnings. In retained earnings, determination of retained earnings. Why companies they are retain the what retain the why they are retain particular profits to not distributing to the equity shareholders or equity shareholders. Why they are retained means these are because of the so many factors, that is earnings of the company, dividend policy of the industry, taxation policy, government policy, general state economy, liquidity, ability to be borrow, repayment of debt, desire of controlling among the shareholders. This is in page number 224. They given this thing, that is determinants of retained earnings. just to go through with this particular merits and demerits to the retained earnings. Coming to the page number unit number 15, that is bonus shares. So in this particular bonus shares, why one particular company given bonus shares to the organization? Just first go through with this page number in particular 235. In 235, they given some meaning to particular bonus share. Then after object, why the main objective to issue the bonus shares to the uh, equity shareholders, it is depending upon the so many factors. So this is the main objectives they are given in this particular page number 235. Just go through with that particular 235, and also advantage and disadvantages of the issuing of bonus shares. So likewise, you must learn about the uh, each particular chapter, okay, and also definitions of the each particular chapters definitions. Okay. Anyone have any doubts? And Uma, Shabina, anyone have any doubts?
No, sir.
Okay, okay, Amma. Okay, Shabina. Thank you, Amma.